When I started trading, I wish someone had told me what I'm about to tell you in this video. In the end, I'm gonna tell you a bonus tip that is really going to level up your trading. And it's the most important thing in trading if you really want to become a profitable trader. So first of all, we are going to talk about introduction to trading. What is Forex? Well, Forex, it is short form for foreign exchange. It is exchange between currencies. You exchange one currency for the other. So someone might ask, well, how do you actually profit from that exchange? When that exchange occurs, price fluctuates, the strength of a certain currency fluctuates. If you're in South Africa, then you know that $1 somewhere last year was about 19 rands, but today currently it is 17 point something rands. So as traders, we take advantage of that fluctuation. When the dollar becomes stronger, we buy the dollar. In exchange, we make profit. When it becomes weaker, we sell the dollar. In exchange, we make profit. We are looking for price to either go up or down. Then in Forex, we have currency pairs. Like I said, you exchange the dollar for rent. That is why we have USD ZAR. So USD ZAR, the meaning behind is that you have an invisible one in front of USD ZAR. So it means $1 it is equals to X amount of ZAR. If you look at the chart, I'll probably put it somewhere here. On the right side, we have different prices. You see many numbers going from top to bottom. Well, those are price levels. And we have a line you always see on the chart. It is the current price level. The level, if you were about to place a buy or a sell, you would actually place it on. Like I said, price fluctuates. So next up, we are going to go deeper into currencies, So like I said, we have in a pair, we have two currencies. The stronger one, the one you see at the front in a currency pair, it is the stronger one. Then the one that comes after that one, it is the weaker one. Thirdly, we are going to talk about pips. Pips are used to calculate a position in trading, to calculate how much you're willing to risk and overall movement. It is used to calculate movement, how much a certain currency pair has moved in a certain period. You have things like stop loss and take profit. So stop loss is basically where you are willing to exit a trade if the trade went against you. Example, if you execute a buy at 150 on USD JPY, but then the price decides to go to 140, you're expecting the market to go up, but instead the market went down. That means you're in losses. So let's say you placed your stop loss at 130. If the market reaches 130, automatically you get taken out of the trade. Then take profit is that you place your buy at 150 and the market actually goes in your direction. It goes up to 200. Then you place your take profit at 210. What's going to happen is that when the market reaches 210, you're gonna be automatically taken out of that trade in profit. So that is just to secure. It is the safe approach because, like I said, the market fluctuates. If you do not have protection of your profit or regulating how much you lose in a specific trade, you're not gonna be consistently profitable in the long run, because we are in it for the long run. We are not in it to blow accounts, guys. So that is basically what happens. Next, we are going to talk about analyzing. Basically, analyzing is predicting where price is about to go next. What do you use to predict where price might go next? Well, there are different ways to predict where the market is about to go next. There are two ways to predict where the market might go or the direction of the market. We have a fundamental analysis and we have technical analysis. Well, with fundamental, it is everything happening in the world. Politics, wars, how well the economy is doing, inflation, and NFP, CPI, all that news, they are part of fundamental analysis. This one is very common. It is technical analysis. It is whereby people use historical data to predict where the market might go next, because the market shows predictable patterns that repeat themselves again and again and again. You all know this, that what happened in the past, it is likely to happen in the future. That is how the technical approach is. We use historical data to predict what might happen in the future. Then we have the less common one. I forgot to mention it. It is sentiment. You basically compare the buying power and the selling power. Let me put it like this. You compare how strong the buyers are versus how strong the sellers are. There are several tools. Unfortunately, on MetaTrader 5, it is not available, but on platforms like, what's this platform? I forgot it. Okay, CTrader. Yes, on CTrader, it is available. You can see how many people are actually buying versus how many people are actually selling. That shouldn't confuse you, because for every buyer, there must be a seller. Like I said, Forex trading, it is trading. You exchange one currency for the other. If you want to buy the dollar, then I'm going to sell the dollar to you. If you make profit, I run a loss on that position. But since 90% of traders are unprofitable, aren't consistently profitable, brokers actually use ebook. Most brokers, or some, I don't know. The brokers I know, they have either B-book or A-book. So what happens is that A-book, it is brokers that pass your orders to liquidity providers. Then B-book, it is brokers that take the opposite side of your trade. If you place a buy, they automatically place a sell. That means they sell that position to you. If you run losses, they make profit. If you make profits, they make losses. That is what happens, but most of the time it's profitable, because a lot of people lose money, so it's profitable for them. Brokers are compensated with spread, and we have seen how tight spreads are these days, because every broker uses that as a marketing tool so that people can use their broker because it has tight spreads. So a lot of brokers have switched to B-book, or they are like hybrid. For profitable traders, they pass their orders straight to the liquidity providers, but for unprofitable traders, they deal with them on a B-book dealing desk. Okay, so next I'm going to talk about risk management. This is very important in trading. Risk management, it is how much you're willing to lose and how much you're willing to win per trade. Because in trading, in order to make money consistently, you need to win big and lose small. That is why most profitable traders would recommend you use 1:2 risk to reward ratio. You risk $100, in exchange you make $200 if you're right on that specific trade. But if you're wrong, you lose $100 only. So in that way, you do not have to have a high risk to reward ratio. You can have a 50% win rate, not risk to reward ratio, but you do not have to have a high win rate. You can have a 50% win rate and still make money profitably over a long period of time. Let me show you how. Let's say you take 5 winning trades and 5 losing trades. That is 10 trades in total. So these 5 winning trades, each trade you risked $100 to make $200. So you had 5 winning trades. So 5 times $200, it is $1,000. So you just made $1,000 and you just lost $500 on this 5 losing trades. 10 minus 5, how much is that? It's 5, ne? So 1,000 minus 500, it is $500. So you just made $500 profit, just like that. That is the power of risk to reward ratio, because you have a win rate of 50%, you win 50% of the time, but in the end you're still profitable. If you want to use 1:1 risk to reward ratio, then you're gonna have to win more than 80% of the time to make enough profits. You have to win at least 80% of the time. Such strategies are very rare. It's possible, but it's in rare cases. So I would advise you to use a higher risk to reward ratio for you to be consistently profitable in the market. So the bonus tip I talked about in the beginning of the video, it is focusing a lot on psychology, because psychology can either make you or destroy you. It contributes 60 to 70% to your trading success. That is huge, guys. So without it, you're gonna fumble the market. Psychology is all about mastering your mind, mastering how you feel inside the market. Whenever you're analyzing, whenever you're in a trade, whenever you face losing streaks, all that, because as humans, we are wired to survive. So losses, they threaten our survival. A lot of us came into trading to make it big, to make a lot of money. When we face challenges, we feel like our dreams are going down the drain. We feel like it's never gonna happen because we are facing a challenge that seems very impossible to pass, you know. That is why whenever you're facing losing streaks, your mood is down, and you have some kind of depression, you feel like you're not cut out for trading, you shouldn't have started trading, and all that. All those mixed feelings, you need to regulate them. The psychology aspect of trading actually helps you regulate all that. Fear of missing out, revenge trading, over trading, all that. As a trader, you need to make sure that you focus a lot on trading psychology. I can't stop addressing this because it's very serious. A lot of people, they ain't profitable, not because their strategy sucks, but because their psychology, their approach to trading, it's not good. One thing that is going to help you develop an edge in trading, it is psychology. If you feel like you're struggling with psychology, get a reputable mentor, someone that has walked your path before, because that person can set you 10 times ahead of other new traders, because he has been through what you are going through right now. He overcome all the challenges you're currently facing. It is useless having a mentor that doesn't actually contribute to your trading success. A reputable one that has track record of consistently being profitable in the market will set you 10 times ahead, guys. He will work wonders for you. So yes, guys, we are going to be sharing more content that helps traders become consistently profitable, and the content we are sharing, it's gonna help you a lot in your trading journey. So make sure that you subscribe and comment some of the challenges you might be facing currently, and like this video, guys, because it helps out a lot